There we go. Okay. All right. So here's what I'm going to do. I know we've kind of got, hopefully now we've got a bottom in the market. Looks like we came down on a lot of these coins. We came back down and took that low again. I know I was actually just looking at, XRP. My wife is always kind of, I got her into XRP at about $1. Oh shit! It was about $1. I'm like, honey, and she's got a boatload of money sitting in stocks. I'm like, honey, if you want to retire early, put $50,000 into XRP and just sit on it. And I said, we'll be plenty good. And so she started putting some money in, and she started making money, right? And she's up the first time she's up $200, and this is all spot trading. First time she went to Coinbase and made $200. She's freaking out. She's like, "Oh my God, I'm gotta go get my nails done. I'm pulling out that $200."
Oh
So,
my God.
yeah, so she goes and pulls the 200. Then it goes up even more, and then without her telling me, I mean, now she's telling her sisters, and her sisters are buying XRP. And this is during that pump. And then what happened is without consulting me, and she knows this is what I'm doing, and without consulting me at $2.98, she decides to buy 5,000 more dollars worth. And
Oh,
I was like,
fuck.
what were you thinking? Because obviously right away when she told me, she's like, I just bought more. I was like, now at 298, and I knew that it was, I told her, I said it was coming back down to 195 or at least 250, and she didn't believe me. So now she's all pissed off, because she bought it. She bought more at the high, and now she's, even if that, she might even be down from where she originally got in at. So she learned her lesson not to, to listen to me when it's time to buy.
Yeah, really. She.
So,
Wow,
but it
I'm
looks like we
surprised.
took that low again, and actually, Gio and I have been talking just because we know the hype and we know that all the talk now is around XRP. I mean, especially when you're on X, and with the XRP army is probably bigger than any other army out there. Um, Gio's been talking that he wants to see 195, 195. I'm like, man, I don't know if we're gonna get down there. I mean, I hope we don't go that low, but and here, look where we're at, 195. He called another low. So hopefully that's where we're at, and that's
That's great.
where we stop. So leave it to Geo to call it. So what I'm going to do is I'm going to start here with basics. I know that a lot of people in here ask a lot of questions. I get questions to me, so I'm going to make this a little bit more of just my trading strategy, but kind of where I start from and how I set up, because we've got so many people that are coming into this group, and a lot of them don't know, how to navigate even through TradingView. So I'm going to go really basic here. So to start, I'm going to make this full screen. So to start on this one, I'm going to start. Actually, I'm going to start on that Aave that I took earlier, because it's got a nice movement. And I'm going to go real basic. I'm going to go with how to set up some of these views on TradingView. Like, for instance, for me, and I know some people probably do know it, but I've got these different views on here. I've got many different indicators that I use, and each one of these little buttons up here is different indicators that I use. So if you've got a set of indicators that you like, let's say for instance this one, this is my stochastic view. So this is when I want to try to find, this stochastic works really good for finding divergences on smaller time frames to try to get an entry. Like for instance here, you can definitely, and this is 3 different stochastics that I've set up, 3 different there are different settings on each one. So on some of these, if I'm looking for a bottom, if I know that I'm coming into a zone, for instance, we know we're in a zone here, right? Because that's what I have marked off, and I'll show that. But if I'm coming into a zone and I know where I want to find the bottom or close to the bottom, then I'll come to my stochastics, because on here I can look for these divergences in stochastics that and it calls them out really easily here. So you've got divergence there. So if I've got, let's say, specific indicators that I want to set up, and I want to save this layout, but yet I want to go to a different layout. Click on these 4 buttons here, and then just click Save Indicator Template, and then what you can do is you name it. So this one I've got named as just S, or I think I have it named as stochastic, and then once you add a star to it, that will put it up here. So each one of these, so S is to me is stochastic. I've got all these, I think a couple of these are the same, but this one here I'll use for specifics. If I'm looking for naked daily points of control, that's one of the indicators that I have in this particular layout. So if I'm looking for, if I'm in the same coin and I'm looking to go to the daily chart and looking for those points of control, then I will click into this one because that's what these lines are here. So that's how you can save and have multiple layouts without having to go and put more indicators in constantly. So for today's kind of lesson and walkthrough, I'm only using 3. This is kind of my main layout. So the layouts that I'm using, obviously everybody now knows, and we've talked a lot about TR main. In Traders Reality, I'm literally only using 2 things in here. One is the vector candles and the EMA cloud. I take out the line in the middle of the cloud because I don't need it. I just use the cloud as a reference point. I also I've got order blocks. A lot of times I'll turn those off because I've gotten to know order blocks quite well. But I do have order blocks in there that I also use. Structure alerts. If anybody, most people now have gotten that from me. That's on every single layout, just because for me it makes it easy. I don't have to do the zigzag and count up, down, and the fact that we use it for setting alerts. So I've got structure alerts there, and then this is a new one that I've been using, and the reason why I'm using it's called EMA touches. So what this one is that if I've also got on here so EMA touches is another EMA. I've got it currently set to a 21 EMA. So my length is 21, and I don't know, it actually uses 2 EMAs, but I'm only using it in one version. So I've set 21, 21, and then I set it as a close, and I set it as an exponential moving average. So EMA touches, the nice thing I like about that is that you can set an alert on it. Sometimes it's hard to know, if a coin comes down or if price action comes down and touches or crosses your EMA, you're not going to know that until you look at the chart. But with the EMA touches, I can come in here and I can set an alert, and I can say that on the 1-day chart, send me an alert if the price action touches this. Or in most cases, I use this actually on the 1 minute. So if I'm in a trade and I know that I'm getting close to the top of a trade and I want to get out, what I'm going to do is if I'm walking away, and I can say, I'm going to come in here and on the 1 minute, tell me when the EMA touches my 21 moving average. Because I know that when it touches that moving average and then possibly closes below it, I know that the price is likely going to continue. So the price will ride that 21 EMA, as you can see here. This is where I was thinking about entering a long, but I didn't. I was looking more for the short in this particular instance. Let me open this up more. This is on the, there we go, 15 minute. Okay, so you can see that price is usually going to ride and hold that 21 as support. And once it crosses and closes below the 21 EMA, it then tends to retrace of some sort. We probably had a market structure flip on the lower time frame here. We came up for a retest, and on that retest, we did not close or did not continue up. So this now tells me, since it touched the 21 EMA, I'm looking for it now on probably the 1 to cross below. Am I on the right one? Okay, so I'm up here now. So what I was looking for is an entry short to take earlier today on this one, because I knew on the 15-minute, I knew that we had the high. I knew we broke. We had that nice break that came back down, and I'm looking at this zone, which is what Gio talked about on stream. Anytime you see equal highs, put a line in there, because you can know, and if you look back at any chart, when you see equal highs like this and multiple attempts to cross it, you know for a fact that that is not likely not going up any higher. So when we ended up breaking down, and then I saw this morning that it was already coming back up to take that, I knew it was going to take those highs. So I then was now looking in this zone. I was now looking for that entry, for that perfect entry. And in the case of the EMA touch, we were here. I mean, I had a short somewhere in here, and I ended up getting out of it, and then I ended up getting back in because as soon as I saw this one come back up, and we started closing below the one, we came back into the zone.
Corey,
Yeah, yeah. Can you hear me?
you're lagging. You're lagging really bad.
Am I? Okay, I'll try to slow
Yeah,
down.
we lost you for a couple, 3 or 4 seconds.
Yeah, hope it's not my earpiece. My earpiece, the batteries are not that great in it. So just say something if it gets really bad. So here was this was the zone. This was the top. This is the zone that we were looking to come back into. So what I was looking for is I know that when we start breaking below, and obviously I've got two fail safes here. The first one is the 21, and the second zone that I look for is the EMA cloud. So we broke the EMA cloud, came back into it, came back up in to mitigate this zone, and as soon as we started closing back below, I knew that it was all downhill from there. So this is ended up being where I entered, and then entered right here, one of these zones here where we lost the 21 EMA. So take a look at a chart. This works with any time frame, obviously, but once if you're holding the 21 and the 50 as support, eventually that 21 is going to cross below the 50, and from that point it's all downhill, or it's all the opposite direction. So when we've crossed here above, it was uphill, and when we crossed below, then it was downhill. So that was a pretty nice trade. I got out a little early, but I started looking for a pump back above. So I think I did end up getting out somewhere in this zone because again, I'm watching that 21 and the 50. The minute we close above the 50, we know that we're probably looking for one more retest before the continuation. So that's how I use the 50 and the 21 kind of in tandem. And if let's say I missed it and it's coming down here, well then I'll just wait until we come back into the EMA cloud, knowing that it's on its way down, and I might just put something in lower leverage. It's not always about that high leverage. So these are the two that I tend to have on every single one. So let's go back to my 15-minute. And actually, I'm going to come back out to a 4-hour. So I'm just going to grab a coin, just some random coin here, and I'm going to show how I'll set up for a trade. Okay, and this is kind of using that same strategy. So when I take a big picture like this, what I normally do, I'll come in first and I'll say, okay, where did price react to the most? And I'll draw that box out, and you can literally see clear as day that we had multiple touches in this zone. We had resistance coming in, flipping to resistance, flipping to support here. We came back down, touched support again. We came back down, touched this as support. So we know over here that we've got high reaction off of that flip. Then same exact thing happened over here, reaction. We bounced it to try to come back up to mitigate another zone that looks like it's here. We've got a lot of reaction in that zone. So what I do is I try to lay out, where are the areas that we are going to likely get some sort of a reaction, because what we're trying to do is we're trying to find that zone it's either going to hold that zone as support or hold that zone as a resistance flip. And you could kind of see, if we were to bring this down, we had a reaction here. Well, sure shit, we had a reaction here. So high levels of movement or flips tend to occur over and over and over again. So this is one of the things that I'll look at before I even start diving in on a low time frame is where are these areas located? We spent some time here. Obviously support. We tried to hold it. We broke through it, came back in for the retest, and back down you go. So this is an area where obviously if we came back into it and started rejecting off it, this would have been an area that I looked for a 3-minute to 5-minute market structure flip and then ride that one down. Same thing here. This came up and obviously there was probably an order block. It left behind an order block. This came back in to grab that order block and down we went again. So on this coin, on Bico, now we're zooming in a little bit more. So we know that these are your high level confluences. I'm gonna high level flip zones. Now what I might do is I might come into a 15-minute and do the same thing on a 15. Are there additional areas on a 15 that we see that are flip zones or high reaction zones? And you can see that we are in one right now. So this is kind of a way to, on the overall big scale to look to say, okay, where could that price possibly flip from? And then from there, we're now going to dive in to say, okay, what else might be down there? Now we start looking for those confluences as to is there good reason to believe that it's not going to another zone, which would be down here? And that's where you start bringing in. I like to now would bring in or start watching the EMA, because on the 15-minute, I think the 15-minute with the purple EMA cloud is now what I'm really paying attention to with that size of a movement. And you can see clearly that we have not crossed and held a candle above the 50 EMA since the start of this complete move down. We'll come back into it, but if we come back into it and we don't close a candle outside of it, it's just rejecting. And as soon as it's rejecting, you can literally.
From Nonstop Nutrition, thank you for your order.
Who's getting a hamburger?
All right, you're beeping.
So we came into the 50 EMA. We did not close a candle above it. We rejected back out of it. That's another entry zone, is a rejection of the 50 EMA, and then a continue down. Same thing happened here. We came into the cloud and we could not shake it, and this would have been another possible scalp entry for another short. So what I'm doing now is I'm waiting. I'm literally using this 50 EMA cloud as my kind of holy grail as to, I want to see this thing flip. And in order for it to flip, we now want to see it holding support, because it's been rejecting the whole way down. And now what we want to do is we want to break it, obviously, and we never want to enter on the first break. We always now are looking for that market structure to break. So we are still obviously in a downtrend. We're still making those lower lows. And one thing that Geo teaches a lot is that, the object of this lower high, or this lower low right here, was to take out this lower low. So we came up to get a lower high, and that lower high needs to now continue to a lower low. So we're still making those lower lows. So what we need to see now is we need to see multiple consecutive higher lows in order to flip it. So we're coming into the cloud, and what likely we're going to see is now we've got our first higher high printing right here. Okay. Oops. Let me give it the wrong one. So we've definitely got probably a 1 minute. Looks like probably a 3-minute now break. So we've got nope, that's only a 2-minute. So we've got a 2-minute break. So we've definitely got a higher high going here. So now what likely is going to happen is we're going to still come back in for that retrace. So on the 15-minute, grab that, delete that. So on the 15-minute, now we know that we need to make that very first higher low. We've made a higher high, but we still need to make that higher low, because we still could come up to this zone here, since this was one big move. This is our current structure, is here on a 15-minute, here to here. Okay, I'm gonna delete this. So we know now that we are in this area. So to break 15-minute structure, we need to make it to here. If we're going to get in on a lower time frame, obviously it would be somewhere down here. But we're still in an indecision zone. So we want to break above and hold candles above the 50 EMA. So likely, I don't have my. Let's find my drawing tool. I'm not as quick on these as Geo. Brush. So what we're looking for is that clear defined bottom on a 15-minute. And if I come back out, let's find somewhere else. Okay, here. This is what we want to see. We want to see a clear defined bottom, because we know that we can make a higher high here and then still come back and test that bottom again. We want to see a higher low. This right here was a higher low. This right here is a higher low. So once we know that we're in the clear and we start closing candles above the 50 EMA and a retrace back down into it and then a continuation, this here would be our entry zone, stop below the low. Because we know that once we have put a candle or our stop loss below the bottom, what are the highly good chance that we're not going to come back to that, because now we've rounded that corner, we've flipped market structure, which is right here. This is a 15-minute low, 15-minute high, broke structure, came back down into the zone to retest, didn't come to a very deep retest, and this is actually what it ended up leaving behind. When Geo talks a lot about consolidation at the bottom, I'm now watching on every single bottom. I'm watching for that 3 tap, because you'll be amazed at how many times it actually happens. 1 tap, 2 tap, should have came back to that 3rd tap here, but what ended up happening is it ended up coming back here and swept it all. But the stop below the low, we still would have saved that. We still would not have got stopped out. So 1 tap, 2 tap, 3 tap. Anywhere there's a low, there's usually 1 tap, 2 tap, 3 tap. And usually, once that 3rd tap has happened, or that 3rd little pullback, as soon as you start seeing candles close back above the 50 EMA, now now for me, I know that we're in a continuation zone. We're going to start continuing up. So let's come back over here. So now what I'm going to do here is I'm waiting until we've come up here to a 50. Because we made such a large move, I want a 15-minute market structure flip. So here's 2 different ways that I can do it on a few different coins that I'm watching. Obviously, most all these coins look the same right now. So I'm going to come in on the 15-minute time. I'll come into my market structure alerts, and I will set a bullish MSF. And I'll set it, if I just want to watch it just one time, set it as once. If you've got a coin that I want to set and see every time there's a 15-minute market structure flip, I'll do this usually only on the higher time frames. Definitely don't want to do it to 1, 3, or the 5, because you'll get alerts all day long. But you could set it on once per bar close. So I'll set a 15-minute market structure flip. So when price comes back in here, likely we're going to come back down and test this zone one more time. Once we break the 15-minute market structure flip, my alert will go off, and that now is my alert to say, okay, watch it. Is it, number one, is it going to come up here, since this is the 15-minute zone? If we come up and we break this zone with a candle and come back down, that to me is not a market structure flip. That to me is kind of saying it's an SFP. Watch it, because it probably is not going to, it's probably not going to go back up. There's a good chance it could come back down and hang down maybe more range, even longer. So what I want to see on a market structure flip, I want to see this. I want to see when it does flip Let's find a good. Here would be a good market structure flip. You want to see multiple candles closing. I mean, at least one full candle, but I'd like to see at least 2 or 3 candles closing above that MSF line. So if this was your market structure flip here, we've got multiple candles that are spending some time down there before coming back for a retest. So come up here, spend a little time, spend an hour or 2 hours up here. Then what I'm going to do is as soon as I start seeing, and what's likely going to happen then is this. Let me find exactly what is probably going to happen, and this is going to happen over and over and over again every time you see a market structure flip. Let's find a bottom. Okay, so we had a bottom here on a 15. Let me hit the replay button. Okay. So I'm on the 15. I'm going to play this forward a little bit. And this probably wasn't the best example because obviously the 15-minute is way up here. We had a big move. So this is your 15-minute, your 30, your probably even your 5-minute structure is all the way up here because of that particular move. Speed it up a little bit here. So now I'm waiting for, obviously I'm watching, we're watching for consistent candles closing and holding above. Another confluence that I like to look for is if we are holding that, when you finally start holding that EMA cloud as support and you don't continue to close any large candles below it, is always a very, very good area of confluence. So this area right here is confluence, and we can probably take a look at it later down the road. But we've got multiple candles here now closing above, and more confluence that I always look for is vector candles leaving the EMA cloud. You got the same thing here. When you've got a vector candle, a green vector candle on the bottom or a red vector candle at the top, that is market makers saying, I'm home, I'm here, I want to secure a position. I want price to get out of this zone, and I don't want it to come back. So we've got a lot of buys that are happening here, and market makers probably putting in his buys all happen down here. So he's using a lot of tick volume to push price up. And again, he did it right here. So he wanted to secure this bottom, and then here he's looking to secure it again. So now you can clearly see that we are holding the 50 EMA as support. So now on a lower time frame is where I would be looking. Once I saw this, don't mind this big candle because at this point we would have been in a 15-minute market structure flip. But in this area where I start to see clear indications of green vector candles, now what I'm solely depending on is the EMA cloud and the 21 EMA. The 21 EMA now is clearly holding the 50 EMA now as support. So here we came back in and we flipped it, and now is where we're flipping it and we're holding it as support. So not only do you have price holding support, you've got the 21 EMA or the last 21 candles are also holding the EMA support. So my entry on a lower time frame, on this particular one, on a lower time frame, if I get in on the 3, is I'm looking for it to hold above, and with those green vector candles that I saw in this zone, coming back and retesting into the area. So it could be anywhere over here, it could be somewhere up here, it could be somewhere down here, but stop has got to go below the most recent low. Don't move your stop loss up until you know that the price is moving up far enough to where that you're in profit. Now you can move your stop loss to entry, and now you're running a free trade. So let's keep playing this one, see what happens. And if I'm just scalping this thing, obviously if I would have entered somewhere back over here in this first one, I'm now watching for the same thing on a lower time frame. If I'm just taking a quick scalp, You know, and you can do this in any time frame. So a quick scalp means that I, you know, still kind of an indecision zone, but I know we're moving up. I will watch to see when that same thing happens again. When we start to close a candle on the 1 minute time frame, closing a candle with a red vector candle coming through the EMA, and now there's a good chance that if I have my stop loss here, I'm safe to run a short or to get out of it. And here I got out of it at the top. Now I know that we're probably coming back down to retest another zone. Well, what zone are we going to retest? How about we just retest something with high confluence, which again comes into play with a smaller time frame and putting out that box, because we know we had multiple touches in there. And now I'll play it. We're holding that zone again, and now we'd be looking for, you know, if I'm getting in again, now I'm looking for kind of the same thing I looked at over here. Are we going to hold, or when are we going to hold that EMA on a lower time frame to get back in? We've got a zone, obviously we've got a zone here and there. So at this point, I'm out of the trade. I'm looking to get back in it. Or if I were to enter and put my stop loss below the low over here for a longer term hold, I'm still plenty safe. And I'm on the 1 minute. And on the 1 minute, I've got, from what I'm seeing, is a tap here, and I'm looking for that third tap. See if it holds. And it didn't, and up we go. So at this point, here is where I would look to say, okay, we are clearly seeing a rounded bottom. You know, we're clearly holding both of those as support. The 21 EMA flipped the 50 EMA here, and now we're holding it as support, and up we go. So, and if you do the same thing on, let's say you do the same thing on a 15 minute, you know, it's all the same no matter what time frame you're looking at. We came down here, we flipped it, and now we're holding it as support, and here holding it as support, and up you go. So entering on, you know, watching the 15 minute on a big move like this, entering on a 15 minute, or using the 15 minute as a market structure flip, and then I'm going to a smaller time frame to actually get in. All right, I'm going to come over to the chat, see if we got any questions. And here again, you can see that we are just holding that 15, and as soon as you start closing candles or see that red vector candle coming through the EMA and then coming up for a retest, if you can't make a higher high and you continue back down, you are likely going lower. And we'll see it right up here. So here's the big move, still holding us as support. And then here's where you're going to see waiting for a red vector candle or a close below the 50 EMA. Red vector candle is just a good sign. So this was just in and back out again. There we had a red vector, but it wasn't through the EMA. So now we're just, obviously we're just ranging at this point. So here is where you start to see that we're closing candles below the EMA, but we're failing to make that new high. So came down, closing candles below, failing to make the new high, and then we came back up again, and then...
Did something fall down again, Mom? Or did you just fall down?
What was that?
Oh. Sorry.
Oh, okay. No problem.
I'll mute him.
That's all right. You're fine.
Just for the just for this, I'll mute. I got Miles and Ty muted.
Okay. So when I see, another thing that I'll watch for is when you've got a clearly defined low and a clearly defined high, this is, and it's really not, it's easy to come in and mark what is your high, what is your low, because we know that we can range here for a month. What we're really looking for now is, are we going to break this and retest for continue up, or are we going to break this for a retest and continue down? So right now I'm clearly seeing that we're ranging because we're going sideways. But in order for me to look at possibly either getting back into a trade or looking for a short, one of these two have got to be broke, because eventually one of them is going to be broke, and that's where you're going to see the real move happen. Because right now we're in a 15-minute and we're not really moving much. So we broke it there. We came back down to retest again, and then up we go. And then at this point is where it gets to be interesting, because we had, to me, I call this a blow off top. If you've got a big push up in a short amount of time and a big retracement back, that to me is my blow off top, and that to me now is saying that likely we're probably not going to break that high again. So anything that comes up and gets close to that top again is going to be my area of interest to look for a short. Now, what I'm also going to do is I'm going to come out to a larger picture and see what's the reason why it stopped there. Is there a reason why it stopped there? Okay, let's take a look. Is there multiple other reactions in that area? Resistance, resistance, resistance. Okay, resistance there, resistance there, resistance there. So we clearly have an area of interest that is going on in this zone, because we held support, 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 bounce to come up. We failed it, came back in, retested it, and went back down. So this is a zone that now we can say, okay, well, if it was a zone over there, what's to say that it can't be a zone over here? Now we come in and we say, okay, give me a 5-minute market structure flip, and there's probably a good chance that we're going to go lower if we can't make it above it to continue higher. So we obviously probably had, well, with this big move, with moves like this, it's hard to get market structure, because this is a 5-minute move, a 10-minute move, a 1-minute move that went all the way up. Now we're just looking at failure. So this low here, and here's the high. So if we made a new low, the object of this low here is to break and make a new high. Well, obviously we tried twice and we couldn't do it. So we know now that this is our area of interest, and anything that's going to come back into this is definitely going to be looked at as a short, because we're in the overall macro zone. We've got a blow off top. We couldn't make a new high. We tried twice to make a new high to come out of this zone, and we didn't get it. And then this ended up being where we failed, and this has ended up being where the highest that we went. And that's when I got in. And it also ends up being where I saw that we had all of these equal highs. So now what the game plan on this one is depending on what happens, this is now, these equal highs now are my area of interest for a wick to come up here, wick out all these highs to continue back down low again. So it's just a cycle that happens over and over and over again. Seeing multiple highs like this, look and see what happened. And likely, probably a wick came into it, took out all that liquidity that's in this zone, and then a continuation back down. So I know I kind of went through a lot there, but I'm just trying to get, trying to show people how there's, you don't have to have, multiple different indicators to, kind of see what the market's doing. Just look left. Always look at the big picture. Where has price reacted to before? Because there's probably an area that it's going to react to again, and then you come down to a lower time frame and look and see, is something failing in there? Number one, is market structure flipping in there? Number two, and then what's your confluence? Then what you can do is you bring in, you might bring in some more confluence. So in this zone where I was looking for a short, what do we have for confluences? Okay, here's one with Market Cipher. We've got, oops, we've got that. Price is going up. Oh, what's going on here? Between these two, price is moving up and the indicator's moving down. And that's on the 5 hour. So that's a big time frame to be looking at that. But even on a lower time frame, I'm sure that there's something in here on a 5. So never pay attention to one time frame. Always start at a higher time frame. I like to start, on a daily, just to get the overall trend. Then come down to the 4. Mark out your high probability zones, high probability flip zones, and then from there, just kind of gauge what is the market doing, how is it reacting to the 50 EMA, to the 21 EMA. Where can you find that rounded bottom? That rounded bottom is key to being able to find one. And that's a shit coin too. Let me look at XRP because I've been really studying that one. We're already up. Shit, we were really moving on that one. So here's what I looked at on. I'm going to go to the 5 hour. I was trying to gauge why did Geo think that we were coming back to that zone? What the heck? Why does that not look right? It's not at 51 cents. Oh, I'm in replay mode. That's why. Like, we're not at 51 cents. Okay. So when Geo said that he was wanting to see $1.95 again, I came out to the larger picture and I was like, okay, why did he say $1.95? And that was when we were way up here. And sure as shit, look what happened. We had a flip. Support or resistance, and then we flipped it in a lower time frame to now. Obviously, there was probably a support bounce in there as well. So this is exact zone that Geo was looking at that we would probably have a flip, and sure as shit, it hit it. So drawing out these little boxes in high probability or high traffic zones, high flip zones, is very important on a bigger picture because now you kind of know which way you want to trade to. Now what we're in this zone. Let me come down to a 1 minute, or what am I at? A 1 hour. So 1 hour we had a support, flipped it, right? So we had support and then we lost it and came back in and we retested that exact same zone and then lost it again. Here, same thing. We came back up, retested that zone yet again, and lost it. Now, look what's happening again. We're testing it one more time. One of two things is going to happen. This is going to break the zone and come back and retest it to go up, or we're going to reject it and come back down again. Well, if we come back down and retest it, let's say we flip it, and we're looking to find out maybe where it might come down because this is a big move, and we're now looking for a good entry. So I'm going to come back down to let's do the 15, just because I talked about the 15 a lot. So we're clearly starting to see our little bit of a rounded bottom, okay? We've got this zone that we had multiple flips on, okay? Now can we find a zone in a smaller time frame that's got a lot of reaction? Okay, yeah, sure, right here. Support, and resistance. We got a flip there. We got a flip there, flip there, flip there, flip there, flip there, okay? So now, well, what else is in that flip? Well, sure as shit, there's a 50 EMA that's going to be right in that zone. And we're about to turn our 21 EMA to flip the 50 EMA. So that's confluence right there that we hopefully will now break this with something, obviously maybe even coming up to this next flip zone, right? Come up here, tap this area, come back down, and then hold that 50 EMA. And then as soon as we leave that 50 EMA again on the way back up, I'm in it. Trading 101, boys.
I like it. I like it. Thank
All
you.
right, good. So it's zones to me are very, very important because if price reacted before, it's going to react again. And what you want to see is you want to see price react to it. You want to see price break it, and once it breaks it, it's going to come back and retest it. It just always happens. You know, with this big of a move that this happened up, we all knew everything was bound to come back somewhere. Okay, well, where's it coming back to that it hasn't hit yet? Right there. It has not came back to retest that area. It actually hasn't come back to retest this area. So if something shits the bed, you know, where do you think we're coming to? Right there. So if we now come up here and we get a rejection here and we start closing back below the, you know, really starting to close below that EMA again, you know, we're coming back down to here to test this again. And if we lose this one, we're coming down to here because we haven't tested it yet. And that's a lot. That's, you know, that's the same thing that Gio says every single day. You're going to hear him. He was talking about it earlier today. We haven't come back to revisit the zone. So we've had all this upwards movement, and we're not coming back to retest the zone that we broke out from. Because if you range somewhere and you break out, you're going to come back to that zone again. Here we did it. Here we did it. Here we did it. Now we're just waiting we are waiting now to see, can we hold this as support? If we can, then, you know, leg up. Get a 15-minute market structure flip and holding support on the 50 EMA, we're going up. Now you start holding support, let's say you start holding support on the 50 EMA on the 15-minute, okay? That's good. Now are you holding support on the 30-minute EMA? Now are you holding support on the 1 minute or the 1 hour? So, you know, it works with every single time frame. You just got to kind of look at all the different time frames as you go up, because on these bigger moves that have happened, if you look on Bitcoin, you know, this is the 1 hour. Look at how many times we bounced into that 1 hour and we continued. It's the same thing that what you're going to see on a smaller time frame on the 1. It's going to happen on the 1. It's going to happen on the hour. So we're holding this as support until it you know breaks, until it breaks this one, you know, and it looks like it came back in and held support again. So we're not continually closing candles, and you know, and this isn't, you know, obviously we're looking now for, is it continuing to hold now the EMA as resistance? Because now you're holding it as support. If we're going to go back down the other way, you're going to do this. You're going to hold it now as resistance coming back down. So what we're trying to find is that area where it flips from holding it to losing it. And this is how I mean, I'm still can't say I'm good at doing 80x leverage. I mean, I think it's, you know, Gio's damn good at it. I think it's stupid, you know, for me. It's just very, very risky. But if you trade like this and you do 10x leverage, you can win trades all day long. Yeah, you probably aren't going to be doing, you know, the size gains that Gio's doing. But if you do a 10x leverage, you will see gains. And not everybody needs to get, you know, 300% every single week or every single day, actually. So I like to trade. Most of my trades are between 10 and 20x leverage. To me, that's a lot. And if I'm consistently seeing gains at a 60%, you know, you can become a millionaire with 60% win rate easily, because you're winning a hell of a lot more than you're losing. So always pay yourself. I've learned that the hard way. So this is a strategy I like. If anybody has got specific questions about it, or you want me to run another one, I can definitely do that. We're going to record this one. We're going to get it up on the page, but I'll keep doing some more kind of mini lessons and screenshots as I post some of these alts, and a lot of it will go along this line. So now you'll see that when I post something with this box in there, you'll clearly be able to see that what was resistance had a breakout, came back in, held as support, and now continuing up. Those are kind of the trades that I look for when I post in the alt setups, is a clear defined resistance to support break and a continuation. Okay.